answer may lie with the continent itself. Deepening regional integration through mechanisms like the Free Trade Agreement and building cross-border value chains could offer for African firms a more stable and controllable path forward.
But how might the easing of tariffs between the US and China impact African exporters who have stepped into supply gaps during the trade war? Could these gains now be reversed? De Clayfer explains.
African exporters who briefly benefited from the US-China tensions might find their gains difficult to defend as the two superpowers ease tariff restrictions. During the peak of the trade dispute, some African sectors managed to fill disrupted supply lines, but these shifts were largely opportunistic rather than foundational. As tariffs roll back, Chinese exporters are poised to re-enter global markets with greater competitiveness, often supported by subsidies and large-scale logistics. For African firms, many of which operate with thinner margins and infrastructure constraints, the risk of being displaced is high.
She foresees a stronger competition for African goods in global markets because of China agreeing to remove non-tariff barriers.
The fact that the US could secure a temporary suspension through bilateral pressure, while African countries have struggled for years to ease similar barriers, underscores their asymmetry in leverage and responsiveness. This isn't just a matter of scale, it reflects the hierarchy of strategic importance. The NTB easings, while unrelated to Africa in scope, offers a clear signal. In a fragmented global trading environment, access is not governed by inclusion in multilateral norms.
For Channel Africa News, I am Innocent Samosa in Johannesburg.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 12 minutes after 4 p.m. Central African Time. Now, the African Peer Review Mechanism, the APRM, has questioned Fitch's ratings agency downgrade of the Africa Export-Import Bank, Frexim Bank, saying it was based on a flawed categorization of loans and calling for the decision to be reconsidered. Last week, Fitch downgraded Cairo-based Afrixam Bank's credit rating to BBB-, which is one notch above junk status, from BBB, citing high credit risks and weak risk management policies posed by what they term non-performing loans by the governments of Ghana, South Sudan and Zambia. For more on this, we joined on the line by Dr. Mishek Mutiz, lead expert on credit rating agencies at the African Peer Review Mechanism. Doctor, very good to have you with us this afternoon. A very warm welcome to you.
Thank you very much, and thanks for having me.
We actually did, Doctor, actually discuss this last week, the downgrading of Afrixam Bank by Fitch due to the loan terms and non-performance and non-payment, really, of some African countries. You have raised a number of concerns about Fitch's rating classification of Afrixam Bank's sovereign exposures. If you could break down for us, Doctor, what are the specific aspects of Fitch's rating that you find problematic in its evaluation of Afrixam Bank?
Yeah, thanks for that fundamental question. But before I point out the three areas that we contested effectively in Fitch's ratings outcome, just understand that if you read each and every report that has been published before this one that we are contesting, these rating agencies have always been raising the framework that Afrixam Bank is lending aggressively in Africa, and that it's operating in a very politically risky environment. But you also look at the factors that Afrixam Bank is one of the truly Pan-African institutions that has really been disbursing funding into infrastructure, not just to support the sovereigns, to support the infrastructure ecosystem, which has become a bedrock for the Africa Continental Free Trade Area. So coming to the statement that was issued by Fitch in the rating, we contested three things. Firstly, that Fitch was rejecting that the Africa Export-Import Bank applied the International Financial Reporting Standard number 9. So instead, they said they are doing their own estimation because that International Financial Reporting Standard relates to the treatment of what they call non-performing loans. So they rejected that and say they are applying their own estimation, which was going to overstate the amount of non-performing loans. But we said, look, the loans that you are referring to, they were advanced to these countries, in specifically to Ghana and Zambia, when they had already defaulted on the international loans. So which means the timing of repayment of these loans was going to be problematic. But the fact is that they are not going to default. They will still pay at some point in time. There is no need to classify those loans as non-performing. And secondly, that they characterize the bank's risk management policies as weak, you see, because of the treatment of the non-performing loans, basically. And we're saying, but your report, the same report, acknowledges that the bank has strong capitalization and has got a strong collateralization. So why would you come to contradict that by saying it has weak frameworks on managing risk? Even when you look at the components or the size of the percentage of non-performing loans in its own criteria, there was no need, or it's illogical to move a rating entirely based on a very small component in its own supranational rating criteria.
Dr.
Then lastly,
Mutiste, sorry, before
yes.
we go to the third one, if you could help clarify this. You mentioned that Ghana and Zambia had already defaulted on prior loans when a Frixum bank extended this credit facility to them. Should that in and of itself not be an area of concern?
Yes, it should be an area of concern in terms of how those countries are managing risk. You see, but you are looking at an institution that is meeting these countries at their point of need. So it's another sphere of argument when we talk about how these countries treated this loan that were advanced by Afrexim Bank. But the bottom line is that these loans are not lost, or the money that is supposed to be recovered from these countries is not lost. At some point in time, they will still have to pay. The terms of those loans have still not been breached fundamentally.
All right, and that's basically the tenet of your argument, that
Absolutely.
The terms of those loans have not yet been breached, and therefore any punitive measures should be stayed.
Yes, absolutely.
All right,
Absolutely.
Thank you,
Then
Doctor. Then the third point that you wanted to bring up.
Yeah, the third point, very important. Sorry to eat into your time. But we are saying these countries that you are classifying as defaulting countries, they are shareholders of the same bank that signed the founding agreement of the bank. So there is no way these banks are going to default. Even if they default, they will be breaching their own agreement, which they domesticated into their own national laws, which is the founding agreement of Afrexim Bank. So in this report, all that is not considered, and we felt that it's important for the rating agency to put all these factors in consideration before it makes this conclusion, which we think that if those points are considered, this rating downgrade should not stand.
We had a conversation, as I mentioned, when we started talking last week around some of the defaulting companies or countries rather. And last week, the government of Zambia indicated that it does intend to restructure the loan from a Frixum bank. But as it stands now, it actually does remain in default. And with those comments in mind, and based on what you've been saying now, do you still feel that Fitch's estimate of the bank's non-performing loans is a misclassification, because there does seem to be some murky waters there?
No, absolutely. We feel not on the basis of the preferred creditor status, which we are referring to. So the characterization of these loans by Fitch was entirely based on the classification of what it calls non-performing loans in the bank's balance sheet, which the bank had accounted through the international financial reporting standards. And Fitch said, no, we don't recognize that strategy because it gives you some flexibility. Because the bank's argument was that these loans, you can't classify them as non-performing because they have not defaulted or there has not been any declaration of intention to default. So that's the basis of our argument, not on the basis of the preferred creditor status.
Right. So, how might Fitch's rating and downgrading of a Frixum bank affect the bank's ability to raise funds on an international scale in international markets?
Well, it's a huge blow because already this bank is borrowing money, or it gets money at a slightly high premium because you know that the international investors, as well as the IMF itself, it refused to disburse the special drawing rights to Africa through these banks. So what it then does, it immediately infuses some degree of skepticism to investors as well as the shareholders, because when a shareholder sees this kind of development, they become uneasy. So that immediately increase the rate at which the bank access international capital, which it strongly needs because this bank has supported many of African projects where the international multilateral banks are not interested to finance.
So you as the African peer review mechanism have made your points. What then is the way forward in trying to influence Fitch's decision on the downgrade?
Well, we know that maybe the chances of reversing the rating action are next to none because, you know, these big oligopolies see themselves as market makers and key international players. But I'm sure that our area of contestation is very legitimate and objective. And they've acknowledged that they've received this kind of response from us and that they will put it into consideration. But like many other contestations that we have done before, you don't see the real action translating into maybe a rating change because it's a serious credibility issue. But we believe that in future, before the rating agencies make a move, they need to be very objective, knowing that we also be reviewing most of their work that we'll be doing in rating African institutions.
What you have done is you've called for talks between Fitch, a Frixum Bank, as well as other African institutions. What is the outcome that you hope for from this meeting?
Well, the outcome is that we need to, the rating agencies need to interact more with African institutions that they rate. Not only that, to also consider the data and the information that they present when they are going through the rating reviews, which in most cases you find that the rating analysts completely dismiss some of the data that is put forward by the rated entity, you know, on the basis of lack of trust, which we think that if you want to do business in Africa, you need to treat this information with dignity because that's the information that gives you a clear position of the financial status of these entities, given that these analysts just come for a short time during the review. So it is very detrimental and prejudicial to disregard all that information and then you do your own estimation that will take a conservative view against the entities that are driving the African financial ecosystem.
I'm quite interested in your view, Dr. Mutiz, around African credit rating agencies. There is the GCR ratings, Global Credit Ratings, headquartered in Joburg. There's Augusta & Co., registered or headquartered rather in Nigeria, in Lagos. What has their reaction been? Are they running congruent with the likes of Fitch in their ratings of a Frixum Bank?
Well, I haven't checked the African rating agency's position on the Afrexim Bank. I'm not sure if I know Augusta & Co. doesn't rate Afrexim Bank. I also know that the other rating agencies, smaller one, don't rate Afreximbank. Perhaps we have to check with GCR, but we know that GCR is now part of Moody's. But I haven't seen any movement from GCR's point of view to change, as well as other big rating agencies. I know Moody's also rates Afreximbank from its headquarters perspective. So we haven't seen movement from that. And we do hope that if they decide to move, they will move on the basis of legitimate risk factors that they would have considered, not just on the basis of perception or skepticism on risk.
In your opening statement this afternoon, you made it quite clear of the history of between Fitch and Afreximbank and the red flags that Fitch had highlighted due to Afreximbank's robust lending and infrastructural development loans to the African continent. Do you believe that there is a case for more robust African credit ratings agencies that can, go head to head with the likes of Fitch and Co?
Well, perhaps not going head to head with the established big three, because mind you, they've been around for more than 100 years. So it'll be quite impractical to want to compete with such institutions. But looking at that, they only occupy a very small part of the financing ecosystem in Africa. So our conversation at the moment, which has been centered around the establishment of an Africa credit rating agency, is that we need to focus more in developing Africa's own financial institutions and Africa's own domestic financial market, because having that will eliminate most of the problems that we are having in the foreign currency space, where most of our African countries are exposed through the Eurobonds. So the legitimate case of having an Africa credit rating agency has been to develop a methodology that is context sensitive and context intelligent to inform investors, both in Africa and beyond, about the actual and accurate intrinsic risk in the instruments that they may be interested in. And there is no doubt that there is a lot of interest in African instruments because of the perceived return. You can see that from how the Eurobonds that has been issued so far, has all of them been oversubscribed. So we see there is a big market space for an African rating agency, as well as other domestic rating agencies in Africa, to expand their portfolios in that space.
Dr. Meshack Mutise, such a pleasure speaking with you this afternoon. Thank you for putting all of that into perspective for us today.
Thank you.
Thank you, sir. He is the lead expert on credit rating agencies at the African Peer Review Mechanism. That conversation on the backdrop of Fitch downgrading Afreximbank to BBB-, and that is the lowest ring of investment grade. After that, it's straight into junk status. It is exactly 28 minutes after 4 p.m. Central African time. In just a moment, we'll take a look at the latest markets and sports.
Get the news, music, and lifestyle of Africa on Channel Africa, the African perspective. Africa, it's time to plug into the heartbeat of the continent. Tune in to Channel Africa, your go-to radio station that broadcasts in 5 different languages.
L'Afrique du Sud célèbre la journée nationale du
Kabla hujaitwa kwa jina la Double K,
or more of our forests have been destroyed.
Estamos
Partido Africano da Independência da Guiné.
See, Channel Africa represents every corner of this amazing land. From Lagos to Cape Town, Nairobi to Dakar, we've got you covered with the freshest news, music, and cultures. So, turn up the volume, feel the rhythm. And join the conversation. Channel Africa, the African perspective. Business news on on Channel Africa. The African Perspective.
Thank you, Thami. Good afternoon. $1 is trading at 17 rand 75 in South Africa, Botswana 13.24, Namibia 17 Namibian dollar 75, Zambia 26 kwacha 40 to the US dollar. In Kenya, the dollar is at 128 shillings 718, Ethiopia 134 B55, Uganda 3,000 shilling 602, Tanzania 2,000 shilling 639. $1 in Nigeria is 1,000 naira 556. In Egypt, the dollar is 49 Egyptian pound 57. Tanzania 2 dinar 94. Algeria 130 dinar 619. Morocco 90 ram 16. In Angola, the dollar is at 912 kwanza, while the Congolese franc is at 2,655 to the US dollar. That is all from me. For any business stories you'd like to share with us, please send us an email, newsroom@channelafrica.co.za, or you can call us on +27 11714 4459. For Channel Africa Business, I am Chandruko Ligege.
Business news on Channel Africa. The African Perspective.
And for the business of sport, here is Musibudi Makura.
Sports on Channel Africa. The African Perspective.
Thank you, Thami. A very good afternoon from the sports desk. Now, Louis van Gaal slammed the way United have been run and also argued that he no longer sees them as a football club. Now, the former Red Devils boss spent 2 seasons at Old Trafford, winning just 1 FA Cup at his time at the club, and believes it is now moving yet further away from what it once, what it once was before. Van Gaal argued that United were too driven by commercial success, and that's why they have fallen well short of the league contention in the cup in the past couple of seasons.
It is still a commercial club. It's not a football club, I think. I have said that before. And that's always difficult when not the manager is deciding which player has to come. Is very difficult.
At the same time, Van Gaal also suggested that in order for United to return to an elite level, the ownership should follow the blueprint of bitter rivals Liverpool.
I think it is the way that it should be, because then you can fire a manager because he doesn't give any results. But when other persons buy the players, then you have a problem, because you need to have the knowledge of the manager, the orientation of the manager, because he has to train them.
On to this now. Chelsea have signed defender Mamadou Sarr from partner club Strasbourg for $16 million. The 19-year-old Frenchman has signed an 8-year deal and is eligible to play at this month's FIFA Club World Cup in the USA. Enzo Maresca's side start their tournament against LA Football Club on the 16th of June before facing Brazil's side Flamengo on the 20th of June and running off the group stages against Tunisian side and champions ES Tunis on the 25th of June. So Chelsea as well as Strasbourg agreed a deal for Sarr in January with the view of completing the transfer during the transfer window. Like Chelsea, Strasbourg are owned by American Todd Bodley as well as Clear Lake Capital under the Blue Co umbrella, and Sarr is the first transfer between the clubs. The signing is Chelsea's 4th of the transfer window following the arrival of Liam Delap for $40 million from Ipswich Town, Estavio from Palma Palmares for 39 million US dollars and Dario Isugo from Sporting Lisbon in Portugal for a reported 24 million US dollars. While Tottenham Hotspur are moving towards appointing Brentford boss Thomas Frank as their new head coach following the sacking of Ange Postecoglou, Brentford are expecting a formal approach from Tottenham Hotspur in the next coming days, but there has been no confirmation so far of a dialogue between the two clubs. Brentford would be entitled to compensation for Frank, with sources are indicating it would cost Tottenham Hotspur more than 10 million US dollars to extract him from his contract, which runs until 2027. That figure could rise depending on just how many members of the staff Frank decides to bring with him if he is named the Spurs boss ahead of next season. And finally, Comrades Marathon winners Dedejana as well as Gert Steyn were well rewarded on Sunday, racking in more than 85,000 US dollars each at the annual ultra distance run race in South Africa's KwaZulu-Natal province. Now, for their efforts, both athletes took home 50,000 US dollars as the race winners. In addition, they received 12.4 thousand US dollars as the first South African runners to finish the race, while Steyn also picked up a further 3,000 US dollars for being the first woman through a hotspot point in the second half of the race. Now, while neither athlete broke their own race records, which was set on the course back in 2023, they both received 25,000 US dollars for setting the fastest average pace event ever recorded in the men as well as the women's down run events. In total, Dejana took home 89,000 US dollars, while Steyn earned 91,000 US dollars. It's a wrap from the sports desk at the Sawa. For any sports stories you'd like to share with us, our email address is newsroom@channelafrica.co.za or give us a call. The newsroom line is +27 11714 4459. For Channel Africa Sport, I am Musibudi Makura.
Sports on Channel Africa. The African perspective. Africa, meet Abedi.
Yeah, that's me.
Abedi is a music lover through and through.
I really love African music.
He's got a taste for all kinds of tunes and spends his days listening to Channel Africa. Guess what? He didn't know.
Okay.
Channel Africa wants to help Abedi and all music lovers everywhere to discover even more incredible music. That is why Channel Africa is calling on all African musicians to submit their music. Musicians, remember to give us all your relevant information. Make your submissions at music@africa.co.za. Submissions are your chance to be heard on radio, but sadly, they do not guarantee that you'll be playlisted. All submissions will be carefully reviewed to see if they meet our station's requirement. Channel Africa, the African perspective. From markets to innovation. From markets to innovation, Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 38 minutes after 4 p.m. Central African time. This is Africa in Business on Channel Africa. You'll find us on all the various social media platforms, on X, Instagram and YouTube. You'll find us at Channel Africa 1. On Facebook, we are at Channel Africa. Please do make your way through and comment on some of the leading stories that we've been covering for you today. I think of importance and at least of interest to me today really has been the story around Afrexim Bank and Fitch having downgraded them just one grade above junk status to BBB-, which is the lowest investment grade that there is within the ratings. And the conversation we had with the African peer review mechanism today highlighted the importance of context and understanding the objectives that Afrexim Bank has in the development of the continent, as well as looking at the various projects that they are indeed funding, which are largely driven by infrastructure. So if you've got any comments regarding that and perhaps some of the defaulting countries, please do send us various comments on our emails. In just a moment, we'll be focusing on the increase in taxes in Mauritius. And they're doing this to try and stabilize the country. You'll remember that last week the Mauritian Prime Minister presented a recovery-focused budget to tackle high public debt and trade deficits. We'll be going into this in just a moment with Wasudeo Balu, a tax partner at KPMG in Mauritius.
Africa in Business on Channel Africa.
Now, women-owned agri-businesses continue to lead in the development of sustainable agriculture in South Africa. This was witnessed at the Tiger Brands Heritage Tour in Bronkhorstspruit. The tour sought to explore how innovation as well as precision farming are transforming bean production in the face of climate change. Ndladla Mahlangu was there and filed these reports.
The tour, which sought to showcase homegrown small white beans supply chain as the 2025 harvest season nears its completion, kicked off at one of Tiger Brand's supplying farms in Bronkhorstspruit, east of Johannesburg. It focused on small white bean variety grown by several smallholder women farmers who are harvesting the crop that forms the base of the popular bean products. Fefe Maqubela is one of them.
I do mixed farming. I farm with poultry and I do grain. In the grain, I've planted many hectares of soya as well as white beans. This project is really about the white beans that I have planted on the farm. And the reason what made me to plant the beans is that in terms of the hectareage, it pays more than any other grain like your soya bean or your maize. My challenges basically was funding and probably expanding, getting more land to be able to farm the beans. It has been a very long journey and it's a very nice experience in the sense that you learn so much. There's so much that you can do because especially us as black farmers, we struggle to get the market.
Tiger Brands Culinary Managing Director Dumo Mfini says white beans are a difficult crop to grow as its grading process is stringent and the risks are high. He says despite this and the challenges such as shortages, they've been actively working towards achieving greater food security where they operate while building an inclusive economy.
Obviously, the shortages is due to either climate or sometimes there's competing crop. So sometimes our farmers, the current producers, they look at which crop will give them the most profit. And sometimes some year when the red speckled beans, the price has gone up by 50%, they choose to go and grow that instead of growing small white beans because the bean that we use for koo is so special that not anyone can just grow it.
Mpumi Maisela, Chief Executive Officer at Servicius in Perasavial's Holdings, says there are many challenges that farmers are grappling with and they work closely with smallholder farmers across the country to provide them with agri-fundamentals to support and grow their businesses.
Farmers face a lot of challenges. Most of the challenges they face, they had almost no hand in creating, like the weather, like delayed rains that delays the season. So there's a lot of challenges that the farmers face. We are in plea on behalf of our farmers for more very patient funding to be available for our farmers because seasons can be different. You are as good as your previous season. We're going to start again planning for this season. I can tell you now the challenges we faced in the previous season we are not going to face in this season. There'll be new challenges. And so for us, we do require bold investments to come into SE aggregation to reduce the cost of production that the farmers continue to experience, which threatens their profitability, and that will boost their sustainability.
The day concluded in Boksburg at Tiger Brands Culinary Plant, where we witnessed the journey from harvested beans to a shelf-ready product. Reporting for Channel Africa, I am Ndladla Mahlangu in Johannesburg.
Africa in Business. Insights and real-time updates on Africa's growing markets with Thami Ngubeni. The African Perspective on Channel Africa.
Channel Africa. Now, the Border Management Authority and the South African Revenue Services are hosting the bilateral steering committee meeting with Mozambique to address the challenges faced in the border environment. The committees have been established to deliver on commitments to enhance the existing approach to managing the borders, including the harmonization of policy and procedures and joint organization of resources and structures to support efficient movements and trade facilitation. The Commissioner of the Border Management Authority, Dr. Michael Masiapato.
In this context, we might be talking here about the Maputo corridor within the context of N4 into Lebombo and ultimately into Mozambique, but more critically into Maputo Harbour, as it were. And I think on that basis, we can just cast our minds back. We can remember that in this particular corridor, we used to have instances where trucks could effectively be stuck here for some days, if not weeks. And today we are kind of talking in a bit of a different context. We no longer have that kind of a length, as it were, within the context of border management. So on that basis, we can fairly agree that we've been able to see some of the progress in terms of the work that we are actually supposed to be doing. The critical issue is to ensure that we implement all of the issues that we discuss in this particular conversation, particularly the work that is being done by the technical team on the ground. One thing that we can fairly agree, colleagues, is that an environment that we call a border, it is not supposed to be a place of camping. It's not necessarily supposed to be a place of sitting for some weeks. It's actually supposed to be a point of transition in a way, or a point of passage. And that is the ultimate objective that we have in as far as this part is concerned. The issues in terms of the historical collaboration that we have had between ourselves as jurisdictions are fairly much well documented, and that should not necessarily be considered as a critical challenge. We have also seen, colleagues, that Lebombo, port of entry in particular, is becoming one of the critical corridors, particularly in terms of the movement of cargo from the South African side in particular, going over into Maputo Harbour, as it were. We have also seen, even in terms of figures, that Lebombo is starting to challenge Bay Bridge, which happens to have been the biggest corridor into the continent in terms of the numbers of the trucks that we may facilitate through this particular port. I think
that was the Commissioner of the Border Management Authority, the BMA, Dr. Michael Masiapato. In a moment, we turn our focus to Mauritius and the budget.
Africa in Business on Channel Africa.
Mauritius's Prime Minister Dr. Naveen Ramgoolam last week presented a recovery-focused budget to tackle high public debt and trade deficits. Now, the plan centres on spending cuts, on increased tax on high earners and big firms, as well as pension reforms, raising eligibility to 65. The gross domestic product is expected to grow by 3.7%, with debt slightly reduced. The government is banking on 3 years of austerity to restore economic stability. And to speak to us about this, we joined this afternoon by Wasudeo Balu, a tax partner at KPMG Mauritius. A very good afternoon to you, sir. Very good to have you with us. Welcome to Africa in Business.
Hi, good afternoon, Thami. First of all, I'm replacing my colleague Vasudev, so I'm Hans Biltu.
Hans Biltu, okay, welcome. Good to have you with us. Let's perhaps find out first from you, what are your thoughts on the government's decision to raise the top income tax rate to 35%. I mean, do you think that this will impact investor confidence in the country? And also, how will this impact the high net worth individuals?
Right. So, Thami, first of all, we need to put the budget in its context. So, for all listeners, what we have to, we in Mauritius, we were expecting a budget that would be stricter than previously, just because this is the first budget of a new government. And that government had a clear mandate to bring reforms to ensure that our finances are on track. And if you hear the way the budget was presented to the nation, one of the key priorities for Mauritius to remain attractive as an investment destination was to make sure that the economic fundamentals are corrected so that the country remains or retains its sovereign investment rating by Moody's. So at the back of all the measures, across sectors, increasing taxes, a focus on high net worth individuals. So at the back of that was let's say, a five-year view that measures should maintain Mauritius as an investment grade destination. So that was it. And as you're aware, if you look at the numbers, there are two key things which had to be corrected. One is a public sector debt that was sitting at 90% of our GDP, and the trade deficit, which was sitting at 29.4% of our GDP. So when you look at the key components, it was expected that we would be having reforms. It was expected that there would be fiscal consolidation, and it was clearly spelled out in the budget that in the transition there would be a 3-year phase, and that fiscal consolidation took immediate measures. So the immediate measures to increase government revenue led to those increased taxes. But I agree with you when you say, the tax hikes on high net worth individuals and corporates. I think the tax rates that we're seeing, they are at rates that we haven't seen before. But the government made it very clear that these were fundamental changes or fundamental burden sharing needed by all stakeholders immediately.
This budget projects a 16.9% increase in public revenue. Is this attainable, specifically considering the challenges and the economic challenges specifically that you've highlighted?
Yes, the budget, when you look at the themes under which the measures were announced, you had 3 parts. One was economic renewal, the second one was a new social order, and then the third one was fiscal consolidation. So I think fiscal consolidation are the immediate measures, and then there are more medium to long-term measures around an economic renewal, which would be preparing Mauritius for, the next generation investment platform, being AI tech-enabled, and then a new social order. Now, the measures within those, as you say, is it going to be sustainable? Is the expenditure going to be contained? What we saw, on the one hand, there was the direct taxes increasing for personal taxpayers, corporate taxpayers, high income earners. And on the other hand, on the expenditure side, you had a rationalization of government bodies that gave quite a lot of savings, around 5 billion rupees, and another big savings that is projected to be coming from pension reforms. So the pension reforms responds to the 2 demographic features of Mauritius. One is an aging population, and the second one, the extension of the retirement age from 60 to 65. So previously you were entitled to an old age pension at the age of 60. Now this is going to be phased out, and within 5 years' time, the pensionable age would be 65. And that sits well in what the government has announced, i.e. there would be an increase in taxes, and those reforms, pension reforms, will be, and rationalization of government entities would be bringing the expenditure down. So I hope, we do hope, all things being equal, that when those expenditure come down and then the taxes go back to its lower rates, those expenditure would remain sustainable.
I'm quite interested in how SMEs and domestic businesses will be affected by the increase in tax. Profits of over $533 are now going to be taxed at about 20%. How is this likely to impact SMEs who are wanting to scale, and how will this impact the competitiveness of domestic businesses?
Yeah, so listen, I think in the way you've put it, first of all, it's companies with profits of $533,000, not $533.
No, 533,000, yes.
$1,000 getting into a tax net of 20%. And you see, the dynamics are such that if you look at the micro enterprises and SMEs, they probably would be having a bit lower in terms of profits after cost. The other thing to bear in mind is many of the SMEs are owner managed. And if you look at the way the progressive tax or the increasing taxes have been devised, what you see is currently 81% of taxpayers are not going to be affected by the higher tax rates. Yeah. So when you look at the corporates, I guess they are the larger SMEs, doing more than $533,000 of profit every year, plus the bigger corporates, the banks, and big developers that would be impacted over the 3-year period, because I think in the five-year strategy, it is mentioned that it's a 3-year period, which they call the fair share contribution period, and after which it's going to be back to normal. So I do believe we are still, the budget was announced last Thursday. We're still getting sector feedback. I do know that many sectors are re-looking at their strategy, and I think we, as the business community, will take comfort from the fact that since independence, Mauritius has remained pro-business. Mauritius has been a platform economy serving Africa, and most of the burden, I would say, has been shared by the local business, like the domestic business community. And we do hope that that the longer term view is to retain the pro-business attractiveness of Mauritius. I guess the only big thing that comes out, and that is normal when you look at reforms, same as South Africa, we have also endorsed the global minimum tax for multinational corporations, and that is a reform that is happening globally for all countries to remain, to retain an acceptable tax status.
I wonder if you could comment on this as we wrap up this afternoon. There have been several tax incentives that have been removed, including those for smart cities as well as electric vehicles. How do you believe this will impact investments and developments in sectors like real estate and green technology, for example?
Okay, so let me first of all let me comment on the vehicles. So as you're aware, Mauritius is a very small economy. The environment is extremely important for our tourism sector, for example. And we did see over the last 10 years that we have had a large number of vehicles, being bought, luxury vehicles in Mauritius. Now, the other reality to that is the fact that when you're looking at a trade deficit, you want to correct a trade deficit, you want to look at your balance of payments, you really want imports to focus on the essentials as opposed to the luxury. And I guess it is with this in mind, the environmental agenda, plus the fact that we need to protect our foreign exchange reserves coming out of COVID, which impacted our tourism sector a lot. So it was expected that more taxes would be imposed on vehicles, on the purchase of vehicles. So that is one.
Yes, and unfortunately our time doesn't allow us to continue, but I think point well made. It's really about the essentials right now. It's really about stabilizing right now. Thank you very much for taking us through those budgetary reforms, and we'll see how the new government does fare and how the citizens and business in Mauritius actually react on the backdrop of this. We thank you very much for your time this afternoon.
Thank you.
Thank you, sir. From KPMG, that's Mr. Hans Biltu, partner and head of advisory at KPMG Mauritius. He takes us to exactly 1 minute to 5 p.m. Central African time. Well, that's how we come to the end of Africa in Business for today, as we make way for the French news and French programming for the next hour or so. From myself, Thami Ngubeni, and the team, you have yourself a splendid evening further. Goodbye.
Africa's very own think tank. This is Channel Africa Online. www.channelafrica.co.za.
Vue d'Afrique, un magazine des actualités en français sur Channel Africa. Rendez-vous du lundi au vendredi avec Joël Mouteba sur Channel Africa de 15h à 16h, temps universel. Channel Africa, la perspective africaine.